Welcome everyone to the channel. So we are talking gold forecast for May 18th to the 22nd. So that's what we'll discuss in this video. Now this is the second gold forecast that I'm doing. The first one was last week. And what I said last week was we are in a holding pattern. And for next week, which is May the 18th to the 22nd, we are somewhat in a holding pattern. So let me explain. So first we are looking at gold, and this is the weekly charts, just to show you what happened last week. Now what I've done is I've just added these levels here because I use an internal indicator to sort of draw these auction levels. And just to make the chart a little bit cleaner, I've just drawn them on. So what you can see, and I'll just make this a little bigger, is last week we stayed inside those levels. So we have one above price right here and one below price. So this is last week's data. And as you can see, we stayed below, pretty much within those levels. So what are we expecting next week? Now, if we follow the same pattern, then we will remain inside those levels. And what we are looking for is a breakout from those levels. So let's go to the daily so we can see this a little bit clearer. Just going to reset the chart and go to the daily. Right. Okay. So what do I have here? So a couple of things. So first, we've got the levels, one above price, one below. So these are the sort of major macro auction levels. And if this is the first video you're seeing, I'll explain what that is at the end. But above us, the red lines, we have the next auction level. Okay, so what happens is when price breaks the nearest auction level, then it will seek the next auction level. So we have one below, which we've got these green lines. So here, I've just marked the last green lines. And if we break the auction level below price right now, then we'll head to those auction levels. So the targets for us below price right now is 4,200. That's the lowest hanging fruit in terms of the next auction level. And then above us, if we can break this initial auction level, then we're going to what's this, basically 5,000, give or take. Okay, so 4,900, 5,000, depending on if you're looking at the forex chart or if you're looking at the futures chart. Okay, so that's kind of what we're looking forward to next week. We have to break this level, and preferably want to break this level on a daily time frame. Now we can use the lower time frame as a proxy for the break. So if we take this auction level, say this one right here, okay, let's just say we go below the midpoint of this auction level on say a 1 hour or a 4 hour, that increases the probability that we will just sort of continue in that direction. Now that does not guarantee anything, it's just a probability. So I'm watching the midpoints of these auction levels. So typically when price starts to engage with the sort of midpoints of the auction levels, then it's more likely. Okay, so it's more likely. Again, no guarantees. So I'm watching this level below and of course this level above. Now we have this one as well. Now this one is think of it just, again, it's an auction level, but think of it as more an internal auction level because it's very recent and it's part of the initial move up when we move from this auction level to this old one. So these two levels are macro levels because they're kind of historic levels that already existed, and price effectively is engaging with them, right? So it went to one level, bounced off it, and then went to the next and bounced off it. So these levels already existed. This one in the middle is completely brand new. So that has just been created and really has not been tested. We've just gone through it very easily there on the daily. So no hesitation, we've just gone through it. So the question now is, Will that level provide sort of temporary resistance in any way, shape, or form? So I will be watching that level as well. However, I'm not paying too close attention to it in the sort of the short term, in the sort of the near term. Okay, it may provide some resistance, it may not provide resistance. The key levels I'm watching are these two major levels. However, um, like anything, you also want to watch this midpoint as well. So in general, again, these forecasts come with caveats, which is we will remain inside this level unless we break them. Once we break them, then we are heading to the next auction level. So now that that's out of the way in terms of the overall forecast, we have our levels below and we have our levels above. Let's just revisit auction levels. So auction levels are just invisible lines on the chart that are basically equilibrium. So I have two ways to identify equilibrium. The first is through an internal tool that I use. Again, this is just my tool called the IB initiation block. And this identifies a zone. So you can think of this as resistance, or traditional support, or points of interest. That's all it is. Now, these zones were a bit too broad, and what I wanted to do was find much smaller micro levels, and that's when I implemented the AMM, which is basically auction monitoring. And effectively, it finds these much specific, precise levels within the overall equilibrium level. So just a reminder, equilibrium basically is levels where price is above these levels. What that's indicating is that price is cheap and therefore price wants to go higher. When price is below the equilibrium, what that's again indicating is price is expensive and therefore price wants to go lower. Now it works best on higher time frames, obviously, but with my IB I can use it on any time frame. However, it does work best on higher time frames. So when it comes to gold, especially because I tend to position trade gold or swing trade gold, I am really only using the higher time frames. Okay, so the minimum lower time frame I use is the 1 hour. So that's what the auction levels are, and we've got the forecast for next week. But to bring everything to a head, uh, there are two things obviously I'm trying to do here. The first is understand where to trade. So think of it as a location. Where do I trade? And the second is when I trade. So think of this more as your model or your strategy, etc. What the forecast videos are trying to do is simply help with where to trade, the location, not the second half of it, which is when to trade. Okay, that comes down to your model. So I use a two-step model primarily. It's a whole different video, and that deals more with when to trade. For now, it's more where to trade. So I've got my location, and once price goes to this location, I start to watch price very closely because what I'm looking for is some evidence of price mechanics. So price mechanics is all about when to trade. So your price mechanics can be anything. It could be IFVGs, fair value gaps, breakers, POIs, order blocks, enhanced order blocks, whatever it is that falls within price mechanics, and then that starts to fall within when to trade rather than where to trade. So I have my location for next week, and what I'm looking for now is just that break. Now, if price does return to this midpoint, I'm just saying midpoint, but this very new auction level, I will watch that as well because that can act as a retracement for the week. So it could form the high of the week, assuming that I still keep my overall bearish stance. So overall, I'm bearish. At some point, I thought, okay, maybe we may be heading higher to the 70% fib. But again, I try and be as broad as I can. So let's just zoom out a little bit. As you can see, we have this high right here. I'll just get a fib so you can see what I've always been looking at is this high to this low. And as you can see right here, we've tapped into that kill box I always talk about, which is between the 50 and the 70. And I always mention that that's usually where I start to hunt for trades. So that gives me my initial overall bearishness. And then I thought, okay, because there wasn't real full displacement back to point B, just this point zero right here. Maybe price was either delaying or potentially it could go to the 70. So remember, price can go to the 70. It's allowed to do that. And if it does go to the 70, then it does align with institutional forecasts. So institutional forecasts for 2026 is around 5,000 to 6,000 level. So that would align with that. But my own personal forecast or long-term forecast is more towards the 3,500. Again, this is kind of misaligned with the institutions, but then I started to try and see if I could correct that over time. So I'll say I don't really have a bias overall. However, my initial weekly bias will be bearish. Okay, so this is again based on a daily time frame rather than the weekly and the monthly. So the monthly's trend is still up, and the weekly trend is still up, but the daily is kind of in no man's land and it's sort of curving uh, downwards as you can potentially see. So not price, I'm just talking about the trend. So that's it for today's video and the forecast for May 18th to the 22nd. I will do another one next week, Sunday. So I'll try and do them on Sundays weekly. So if you liked anything from the video, please of course like the video. And if you want to hear more or see more videos like this, please subscribe to the channel. Thank you very much for watching. I'll see you in the next video.